What's going on, and welcome back to another episode of The Mortgage Mindset. I'm your host, Trevor Otsuka. I'm a licensed mortgage advisor with Barrett Financial, and I lend on residential, commercial, and private money for fix and flip. Rocking a solo show today. We're going to get through this super quick, so we're going to jump right into the market update. So today's national average for interest rates, this was effective market close on Friday. Today is Sunday, March 9th. This is going to be live tomorrow, the 10th, Monday the 10th. And be sent out with the weekly newsletter that I send out to all of my real estate agent referral partners. So you guys will be on the lookout for that. Here we go. 30-year fixed is at 6.79%. 15-year fixed conventional is at 6.20%. 30-year jumbo at 6.99%. For a 30-year FHA, you're at a 6.17 national average. And for a 30-year VA, you are at 6.2. All this information is free. You can find this at Mortgage News Daily. They do also have a mobile app. You could download that on your phone. It'll give you a really good barometer of where national interest rates are looking. So for econ data that happened this past week, we had a few reports that came out. Generally speaking, we had a really nice market improvement, slow and steady through the week, all the way until Friday. We had ISM manufacturing PMI. You also had S&P Global Services PMI for February and ISM non-manufacturing PMI. Then on Friday, we had the non-farm payroll jobs report and unemployment rate month over month. Unemployment rate ticked up by 0.1%. But then at 9:30 in the morning, Fed Chair Jerome Powell had a speech. And in that speech, he basically said, I'm paraphrasing here, that the economy is fine. There's nothing that we need to do. And because of that, the sentiment in the bond market with all the traders, the market reacted unfavorably to that. And we basically lost all the gains that we had that morning, and has, really slid us back down to the weakest levels of the week. For this coming week, you've got on Wednesday, month over month core CPI. That's probably going to be the biggest item for the week. And then you also have year over year core CPI for the month of February. You'll have jobless claims that'll happen on Thursday, March 13th. And then you have core producer prices year over year and month over month also happening on Thursday. So for the week after that, biggest thing is going to be the Fed interest rate decision that will happen on Wednesday, March 19th. So we'll see if they're going to do another rate cut or if they're going to pause. My prediction is that there will not be a rate cut. We're just going to kind of see and stay where we're at right now. There's also a Fed press conference that will immediately follow that. That's going to happen at 11:30 in the morning Pacific Standard Time on Wednesday, March 19th. For this week's news article headline, this is going to come from The Real Deal. Here's the title. It says, Blackstone strikes again. New $8 billion debt fund matches historic high. So because I do commercial lending as well, I figured let's throw a little commercial article in here for you guys and give you some insight as to what's going on. So Blackstone is a massive company, and they buy a lot of commercial assets and real estate. And I guess that they have now launched another fund. They've raised over $8 billion in the fund. So here's the notes for this. Blackstone's $8 billion fund signals renewed confidence in commercial real estate. Blackstone's latest commercial real estate debt fund ties the record for the largest in history, matching their 2020 fund. This signals renewed institutional confidence in the commercial property sector despite high interest rates. The firm plans to deploy capital across North America, Europe, and Australia, targeting opportunities in property loans and purchasing distressed debt. So the distressed debt one, okay. Not a lot of people know this, but there's approximately $950 something billion, I think, of commercial loans that are coming to maturity this year. So there's going to be some people that are getting hurt that acquired loans approximately 5 years ago. Those loans are coming to maturity because in most cases, when you get a commercial loan, it'll have a fixed period for 3, 5, 7, 10 years. And then at the end of that fixed period, there is a maturity date, also known as a balloon payment. And you have to figure out what you're going to do with that debt before that balloon payment comes. Either you're going to offload the asset and you're going to sell it and do a 1031 exchange, move all of the assets into a better performing property somewhere else, or you're going to have to sell it, or you're going to have to reposition the debt by refinancing. So, when you're looking at having something that's in the 4% range, and then you're jumping up to something that's in the high 6s to low 7s on your property, that's going to eat into your cash flow. So depending on how tight your margins are, you might be in trouble. So I think that's what they're doing. They raised these funds in this debt fund in anticipation of being able to take on short sale properties and distressed debt, and really try to grow the commercial portfolio. Point number 2 here: private equity is stepping into roles traditionally held by banks. Blackstone is taking on riskier positions in lending deals, partnering with banks to provide financing where traditional lenders are pulling back. Banks and insurance companies are reducing their real estate loan portfolios, creating an opportunity for private equity firms to acquire debt at discounted prices. This could mean more flexible but potentially more expensive financing options for commercial borrowers. Number 3, implications for the commercial market, a potential turning point. Blackstone's move suggests a belief that commercial real estate is nearing the bottom of its cycle and could be poised for a rebound. The fundraising environment has been tough, with total private equity real estate fundraises hitting a 5-year low in quarter 4 of 2024, yet Blackstone's success may indicate improving investor sentiment. For real estate professionals, this could mean increased liquidity in the market, new lending opportunities, and a gradual return of investment confidence in commercial properties. So this should be really interesting to see when they are going to start taking down assets. They are targeting 3 different markets with North America, Europe, and Australia. Obviously, there's a lot of commercial development that's happening all over the United States right now. Vegas is kind of hot. Texas is another really big market that you're seeing a lot of commercial development, especially, in like the Dallas-Fort Worth area, which has a huge metro complex and a lot of population there. So we'll see. I'll continue to monitor this. Obviously, I'm excited if the market is going to be improving in the commercial loan space. I'm going to be poised to take advantage of that. And we're working on some stuff. So I got some stuff working in the kitchen. So I'll keep you guys posted once it's official. But that's going to do it for this week's episode of The Mortgage Mindset. I hope you guys have an absolutely blessed week, and we will see you next week. Bye-bye.